So today we're going to talk about a little bit about planning and how to figure out when you're going to trade. Just jumping into the market and trying to trade when you haven't got a plan or an idea of when you want to trade is extremely dangerous from a profitability and from a kind of preserving your capital perspective. So yeah, we'll talk about the plan and how to get one and find what you're when you're looking to trade throughout the week. So, okay, let's dive in. So I tend to trade with the news or on days when high impact news is scheduled. And I'll show you how to do that right now. So this is one of many economic calendars. Okay, and what you're looking for, so this is tradingeconomics.com. You can look at Forex, fxdaily.com. There's literally tons of them. Just Google economic calendar. I'll put some links in the bio that you can use or the description of the video. But let's use Trading Economics for now. So what I'm going to do, I'm planning for next week, and let's just refresh my screen. And we're going to look for high impact news. So the 1-star stuff, even the 2-star stuff, we're not really interested in. The high impact news is what we really care about. This is really easy, but it's something that I didn't do for a long time because I was of the impression, oh, I'll just jump in, see what's spiking, see what's moving around and take a trade. It was a terrible idea, and I, more often than not, didn't get the return that I wanted, or I would just lose because I had no idea of kind of what was happening or what key events were ongoing. So we can see next week, so on Monday, there's no high impact news. Mondays are generally quite a quiet day in trading anyway. I usually use Mondays for kind of scalping or planning and figuring out what the rest of my week looks like. So on Tuesday, we've got some news coming out of Germany, Denmark, and Canada and the US. So the markets, just from this, that I'm going to be interested in is trading any pair that has Canada in it, because the inflation rate is going to drive a lot of volatility when it comes to this kind of currency pairing. The Canadian dollar might skyrocket against the British pound, for example, if the news is really good, if inflation increases, or it might drop against the yen or whatever pair you're trading. So I'll be looking for Canadian pairs, and then you've got the retail sales. I think that's month to month. Yeah, it's month to month. And again, that can drive significant volatility. So I'll be looking at the US 500, the US 100, maybe the US 30, but that's a really high risk, high volatile, massive pip range market. So you can make a lot of money on it, but you can lose a tremendous amount of money as well. So I tend to stay away from it. So that will be my Tuesday plan. So again, Canadian pairs, US market in the afternoon, and I won't be trading until about 1:30. So I will probably miss the 10 a.m. I don't really trade a lot of stuff in Europe, but that doesn't mean that you have to. And then Wednesday, again, you've got Japan balance of trade. Lots of news coming out in the evening for the US. This will be a really interesting week. The expectation, I think, across the market is that inflation is going to drop, which will be bad. So not inflation, interest rates may drop, which will be bad for the currency. The US has moved down a lot in the last week. We're probably getting more into pair analysis now. But I'd be really interested in, has the market reacted over the last coming week in a really aggressive and over the top manner? And actually, once this news comes out, will it come back up? Or will it stay flat because it's already been factored in, or will it dump again? Thursday evening, I'll be looking at US pairs. So US JPY are probably going to be the pair that's going to have a lot of activity on it. And again, we can see that as we go through the week. But let's have a quick look at what these things over here mean. So if we look at the Fed interest rate, same previously, so the current rate is at 5.5%. The consensus, so what the market is expecting to happen is that interest rates drop to 5.25%. So in theory, that's what's been factored in so far. And the forecast is that that's what will happen. Okay, so that's what those three columns mean. This has a really cool little feature in it, which I think the other ones do as well, but you can go in and check which markets are likely to be impacted. And it's all of them. This is a big event. So yeah, it's going to be pretty interesting. But yeah, you can get lots of information here. You can look at the prices, labour, the gross domestic product. All of these things can be clicked on, so you can find out a bit more information about them. This is actually one of the best economic calendars that I've found so far, in terms of detail. So would highly recommend having a look around here. So now that I've got my plan and I know what pairs I'm going to trade, I can pencil those into the diary. So on Tuesday from 1:30, I'll be looking at inflation rate year on year. I'll be looking at the Canadian dollar and any pairs with that from 1:30, and I'll also be having a look at the US 500, US 100. Those will be my markets for Tuesday. And we can have a little look at the charts in a second, and I'll give you an idea of what I'm looking for over these time periods and where and how those align with the charts. In fact, let's do that now. So I'll come over here. Now, this should hopefully be quite easy to show you because I've been eyeing this up for a while. But I can see here the market's been on a bit of a rampage over the last few weeks. So it dropped off from up here, came all the way down, rallied all the way back up, but it didn't go any higher than this previous high here. Okay, so it kind of hit here. My expectation, or not my expectation, I shouldn't have any expectations in the market. My idea is that when it hits this range up here, it will do exactly the same as it did before, and there will be some kind of reaction, and we'll see the market kind of come back down, maybe to about here or whatever. I don't know. I mean, if we take the Fibonacci extension tool and say, look, it's gone from here, and let's say it does reach here, I always expect things to retrace by at least 50%. That's my personal thing that I look for. I'm obviously just not going to let that run. I'll be keeping an eye on it. But yeah, so let's say it will drop back down to, it's literally to that support point, which is great. So if it hits here and if it reacts in the way that I want it to, then I'd expect it to come back to here. Or would want it to come back to here before I kind of reevaluate the position and see whether it's going to go lower, or whether it's going to bounce up and go higher. It could also, the news could be amazing. Given that the news is on Tuesday, I'd be expecting the levels to get reached around then. If the news is amazing and way above expectations of the market, then you're going to have, maybe the price goes up here, and then I'll be looking for entry when it retests back off this line to go higher. So those are the kinds of things that I'm thinking of when I'm looking at the news. So you can, hopefully that's a good example of how you can correlate the chart to news events that are coming up, and you can plan your days. I expect Monday to be quite a quiet day for the US 500. Maybe it will reach this high range and then stay there until the news comes out. That could happen. I guess we will see. Yeah, I think that's it in terms of finding the trade. You want to trade when there's volatility. You want to check the economic calendar, see which markets are impacted. You want to mark those in your calendar so you remember which ones you're looking at. Don't stray outside. You might look at the big pairs like the USD JPY and GBP USD, or Euro USD is a massive one as well, and think about trading those. But in my experience, the more volatility, the more returns you have. Oh, one last thing. I find it very news is never expected. Even if the market thinks it's going to go down by 0.25%, for example, let's go back to the wait, has this been? Oh, perfect. Okay, I just suddenly thought I messed this up. So let's go back here. Let's say that the Fed has announced, the market thinks that it's going to go down by 5.25%. Okay, the market's had an extreme reaction the week before. Maybe it does go down by 5.25% if the market or all the people think or are worried that interest rates are going to go down to 5%. Let's just say when that 5.25% gets announced, the market will recover, probably quite aggressively. You'll also find sometimes news will come out, it will spike up. So let's say you're in a downtrend and then the news comes, you spike up and you might go, oh my God, it's going up, I've got to jump on board. All you'll find is actually it will come up, it will grab a load of liquidity up top, and then it will just continue on its path down. So I don't trade the actual news event going live. I will generally jump into a trade maybe half an hour or an hour afterwards, once I can see what the impact is. Has it changed the trend? Has it made it go sideways? Is it just a quick liquidity suck? Try not to trade the news unless you're feeling really brave, or your confidence. But I personally won't trade it. I used to try and trade it. I used to try and have like a buy at a certain level and a sell at a certain level. And I always just found that I got wrecked, whatever way I did. I think someone described it as butterfly trading. And I don't think their example of that was right. But anyway, yeah, you'd have a buy at the top, buy at the bottom. And then what I'd find is the price would spike up, trigger my buy, would start going up, and then would immediately dump, trigger my sell. And then maybe maybe the sell would come off, or maybe it would bounce back up again, take out my sell, and then continue on its path. So yeah, always be careful trading before a major news event. I think that's it. That was everything on how I would plan my week in terms of trading and plan the pairs that I'm going to trade. So now I'm going to go and finish my planning. Cool. Thanks, guys. Bye bye.